Okay, we are recording now. So here it is, the fifth, sixth, and seventh trade that we took. This was our fifth trade. This was our sixth trade that ended up with 1.5 in loss and 1.96% in loss. So these were two almost 3.52% lost in one day. So moving on, the next day we had this. We gained about 2.33% in one day. So let's break down the charts, how these three trades were analyzed. So these were the simplest explanations. We can go to the obsidian notes. Fifth trade, it was on 6th May, Wednesday. For the analysis, we have to go on the 15-minute time frame. Let's see here. We have this thing. So we have a risk of about 1.66% in our first trade, and our stop loss was 55 pips. That is, at this point, we have a stop loss here that is 48, almost 46 pips. So we had this analysis, price consolidated on the 15-minute range. We had price was here, this was our resistance, and this was our support. Price was consolidating here on the 30-minute. So what happened, that price consolidated in a 15-minute range. So if we see on the 15-minute, this was our range. Price came here, consolidated a bit. This was our resistance area. This was our support area. Price broke above this 15-minute range, and on the 30-minute we had a 30-minute candle closing outside of this range. Also, this candle did not have any upper wick, so we had to see the next candle wick down and break this high. But the next candle printed bearish with rejection on the bottom side, so we were anticipating buys at this point. So when the price broke the previous bearish candle's high, we went buys with a stop loss below current candle's low. That was about 55 pips. We wanted to aim for 1 to 1, but that didn't happen. This was a simple trade. We tried something, but that didn't work out. Let's see what was our thoughts in this journal. So first of all, price consolidated in the 15-minute range. We discussed that 30-minute candle closed out of that range happened here. Next 30-minute candle closed bearish but with a rejection on the downside indicating bullish momentum. This thing happened here. 30-minute candle closed bearish but with a rejection on the downside indicating bullish momentum. So we move on to our entry. As price breaks the high of previous candle, we enter with our stop loss below the current candle's low. So this was a setup that was breakout, and we can see this was our range. So the next 30-minute candle gave us a breakout plus an impulse entry. So in this setup, we entered using an impulse entry scenario. So these came in our setups. So moving on to the session, the time was almost 10:07 a.m. That is about pre-London, and at 10 o'clock Pakistan Standard Time there is 4 hour candle close. So I was really hoping for price to just keep pushing up, but that didn't happen. We anticipated price to push till the next resistance and hope to secure 1 to 1 risk to reward, but let's see what happened during and after the trade. After the trade, we realized that we made a mistake by risking more than our usual risk on a trade with no opportunities to manage risk. So if we see here at this impulse entry, we don't have any confirmations where any opportunities where we can manage our risk. So that was a mistake, but we were mindful enough to manage our risk. We managed to close 50% when the candle after our entry closed bearish. So we closed 50% here, and then our stop loss got hit. So our initial risk was 1.66%, but after managing our risk, we lost about 1.50%. So that was some improvement. So moving on to the next trade, let's see how that went. We have trade number 6 of this account on Wednesday, 6th May, the same day. This trade was done after almost 1 hour of our first trade. On the next trade, what happens that we have the analysis of, there was a huge 15-minute candle close indicating bullish momentum. So this 15-minute candle close very bullish with a strong body. So I had this sense of there is a lot of bullish momentum in the markets right now. So this was actually the break of key consolidation area that we saw here. Price consolidated and then consolidated again, then price rejected and moved up. So after this candle's close, we had to look for some sort of entry. So we were not trying to cover a loss, previous loss, but there was something bad in our mind. We didn't have control of the situation. So what ended up happening? We entered when price came up, made a new high. Then in the opening minutes, price made a low and then again broke its current high that it had made. So at that point, we entered with a stop loss below the current low, but price pushed up a little and then broke the low that it had created and then pushed down to make an even newer low and then closed here, and the rest is history. You can see that. So if we see what was the setup, it was a candle flip on the 30 minute. We are on the 15 minute. So as you can imagine, price came down. When it flipped, we tried to enter, but that didn't work out. So for the session, it was redundant. We visualized price to push up till the next 30-minute resistance without making a deeper wick, because price had made a wick on the 50-minute prior to this move, this huge 50-minute move. Before that, price had made a wick and then gave us this move. So I was considering that price would just make a smaller wick and then keep on pushing up, but that didn't happen. What happened during and after our trade? We had the realization that we used excessive risk. We should have risked about 1% after having a loss in a day. So we should not have traded, but if we even traded, we should have risked about 1%, but we risked here 1.96%. So we used excessive risk. That was a negative point in this trade, and there was an early entry with weak confirmations. So price had made all this lower wick in first 2 to 3 minutes. We didn't have any time confirmations. If it took 7 minutes, that would have been perfect, but I was too afraid that this move was sudden. So next move could also just keep on pushing. So we just entered and ignored the most important SRC principle. That is, when price has just moved away from a zone, let's consider this as our zone. Our resistance would be here. So price closed far away from this zone. So when price has just closed far away from a zone, the more price has moved away from a zone, the higher the probability of retracing it. Retracement of price back to the zone to give some sort of pullback or to collect some sort of liquidity. Because price cannot just keep on pushing and pushing and pushing. It has to make a high and a pull back and then retest the resistance and keep on doing that. It cannot just go up, go up, go up, go up, go up. So we realized our mistakes. We used excessive risk, didn't have any confirmations, ignored the rules, and that cost us about 1.96% in our trade results. And our stop loss was about 35 pips, so we lost about 35 pips. Moving on to the next day, on the seventh trade of this account, we have this. So here it is. Let's see. On the 7th of May, Thursday, we risked about 1.80% with a stop loss of 36 pips. We sold the markets with a lot size of 0.5 lot, and at the time of trade, it was about 9:20 a.m. in the morning, almost half an hour before 4-hour candle closure in pre-order. So what was our analysis? Price made a high, then created a resistance, came down, giving us a pullback, creating a support, and then it tried to push up, but we did not have any confirmations because the support forming candles high is not broken. So there are no confirmations for buys. We wait for the next candle, it prints bearish. We are not interested in sells, not interested in buys. Sells would be below this resistance, buys would be at the break of previous candles high. So the next 30-minute candle just closes below this support, breaking this support, and we have a clean range till here. That is about 106 pips. So what ends up happening? There is no bottom wick on this breakout candle. So the next 30-minute candle after the breakout made its upper wick in its first 15 minutes. So in this 30-minute candle, the first 15 minutes it went up, made its upper wick, and then after 17 to 20 minutes it broke its own low and we entered at that point with a stop loss above this current high that was about 36 pips. So with our TP here at this area where price had some hiccups in the past, so we recognized this as a setup that was including a breakout, plus we entered with an impulse entry on the 30 minute. There was also a 30-minute candle flip when we executed. So we were in the pre-London session at 9:20 in the morning in Pakistan. So that was about pre-London. We visualized after entry, we visualized price to push till the next support area that was here to fill the green range on the left. So at the point of from the point of entry till this resistance there was till this support there was green range. So we anticipated price to push till here. So what happened during the trade, that everything was perfect. Looking back, the analysis, the execution and the confirmation were perfect. So we just closed full position as the new 30-minute candle broke the previous 30-minute candle low in 3 minutes. So what happened that after an entry, price pushed down and then closed here. The next 30-minute candle, without making any wick, just broke the previous candle's low in the first 2 to 3 minutes. So when it pushed down, approached our area of interest, we just closed full position. So that trade gave us about 2.33% in profits, and we got about 46 pips in profit. So that was it for today. Let's close this Obsidian app where I keep track of my journal. So on Sunday there will be a video on our YouTube channel that will try to explain the psychology that goes behind trading. So it will be a very scientific approach towards psychology if you guys wanna go in depth and understand